To do anything bold in life, you have to blaze your own trail. You have to be a trailblazer. But to be a trailblazer, you have to embrace the unknown. And one of the most beautiful things to me about the Palantir community is all of us as Palantir investors at the end of the day are embracing the unknown. Is this a once-in-a-lifetime investment opportunity? Maybe. But for now, it's unknown. And in this video, I'll attempt to give my thoughts, analysis, and predictions on what to expect for Q1 2023 earnings for Palantir Technologies. Let's get into it.
Hey guys, before we get back outside, let me give you some insider, get it, because we're inside, knowledge about two things you should care about as a Palantir investor. First of all, dailypalantir.com/subscribe. My email newsletter every single day goes out to 1,900 people, Monday through Friday. If you are a Palantir investor, you should be subscribed to this. Would mean a lot to me. And it's 5 minutes. You get your basic updates every single day. There's a lot to cover on this company, so you should be subscribed to that. dailypalantir.com/subscribe. Second of all, if you like audio content, I have an entire audio startup, and there's a lot of Palantir content on that startup. App is linked in the description, audia.io. You can download it, check it out, search for Palantir, and get all the Palantir content you want. Finally, this video was a fun video to make. It was a fun video to edit. My editor is linked in the description as well. He did a really good job. We hope you enjoy it. Thank you for watching. Thank you for keeping up with the channel. And let's go back outside.
The first thing I want to see in Palantir's Q1 2023 earnings is US commercial growth. Full year 2021, they did $201 million of revenue. By full year 2022, that went up 67% to $335 million of revenue. Alex Karp has basically gone on pretty much every interview over the past couple months and has said US commercial is growing like a weed. Now, last time I checked, weed makes you high. So if it's growing like a weed, it should be growing high. And so I'm pretty excited for US commercial growth because I think if it's growing high, it signals two things about Palantir's commercial business in the United States. Number one, even though their sales and their sales teams are not as strong as other enterprise companies in the SaaS space, if the product is able to sell in the United States, then at least in the United States, this team in Palantir is figuring out how to get commercial enterprises to adopt Palantir Foundry, even if their sales team is not as big as other companies. The second thing it's going to tell me about Palantir's business is that in the United States, even though we're in a pretty unstable macroeconomic environment, some would say we are definitely heading towards a recession, if US commercial is able to continue to grow at these rates, that means the demand for Foundry's product is living up to its promise. If the economy goes bad and your business needs to become more efficient, more effective, and find ways to save money, Palantir software is actually able to get the job done. And if they're able to grow that well in the United States, that means US businesses want to innovate, want to adapt, and they're looking at software like Foundry to be able to help them deal with an uncertain economic environment. The second thing I care about for Palantir's Q1 earnings is if they are GAAP profitable. Now, this is one of the biggest things to worry about when it comes to Palantir because last quarter in Q4 2022, they ended up being GAAP profitable. They showed an EPS and earnings per share of 0.01 cents. Alex Karp in August of 2022 said that they're not going to be GAAP profitable till 2025, and they were 2 years ahead of schedule. Now, why is it really important for them to become GAAP profitable for a consecutive quarter? The S&P 500, which is the largest index fund of the 500 biggest companies in America, and the committee that governs it has said that if your company has founder class shares as the majority of the voting shares, which Palantir does with F-class shares, that you are now eligible to be included in the S&P 500 index. And before, that wasn't the case. Palantir ends up making a really big deal out of this. I mean, they go so far as putting a public shareholder letter out to everyone saying, hey, look at this new rule that the S&P 500 committee just came up with. It's about GAAP profitability. What did we show you guys on our last earnings? We were GAAP profitable. Now, to actually be included in the index, you have to have a $12 billion market cap and be GAAP profitable for 4 consecutive quarters in a row. I just could not see for the life of me, and if this happens, this would be really one of the most strategic errors in terms of marketing and PR, for Palantir to make a big deal out of this S&P 500 change rule. I mean, published a shareholder letter, basically said, hey, the companies that are founder-led have the best vision, can become the biggest companies, and because we're founder-led, we weren't eligible before, but now we are. So you guys should care about this, and then show up the next quarter and not be GAAP profitable. Now, I am super sympathetic to a company not being able to beat its earnings in the macroeconomic environment we have right now, but the problem is Palantir kind of put this upon themselves. Last quarter, they didn't need to get GAAP profitable, but they did whatever financial engineering they had to do to become GAAP profitable, signaling to the market, hey, you can't say we're not profitable anymore. We're 2 years ahead of schedule. Now we're profitable. And then 3 months later, they make a big deal out of this new rule change that says companies that are GAAP profitable and have founder class shares can become part of the S&P 500, which means the only thing stopping Palantir from getting into the S&P 500, which means thousands of hedge funds and institutional investors will now have to own a piece of Palantir, which is bullish, good news, is them becoming GAAP profitable. Now, could they end up not being GAAP profitable? Sure, it's possible. It's just I don't see, with all the hoopla they've created over the past couple months about why GAAP profitability matters, to end up showing up in a quarter, especially when you're saying your US commercial business is growing like a weed, and not figuring out how to do the financial engineering you need to do to maintain GAAP profitability. If they are not GAAP profitable, it would be the biggest surprise to me of Q1 earnings. I don't know what financial engineering Palantir is gonna have to do this quarter, but I hope whatever they do, they can just figure out how to become GAAP profitable. Hey, you work for UPS, right?
Yeah, I do. What's up?
What do you think Palantir is gonna deliver this quarter?
I definitely think they're going to deliver a decrease in stock-based compensation.
Now, stock-based compensation has been coming down pretty significantly every year since they went public. Last year, it was about 27.5% of a decrease from the year prior. The year prior, 2021, around 776 million, down to about 564 million in 2022. For them to stay on track with that, let's just call it a decrease of 30% for this year. That means total SBC for 2023 would come in at around $394 million, which means every quarter they would be paying about $98 million a quarter when it comes to stock-based comp. Look, if they can do that, that would be really, really exciting. I think it will be a bit difficult for them, at least in this quarter, to have a meaningful reduction, because if they ramped up on sales, which means we have a decent level of commercial revenue growth, then they have to compensate salesmen, right? They have to compensate their employees. Snowflake, as a comparable, spends 70% of their revenues on sales and marketing. Palantir, I don't think, is going to have that much of a comparison because the product is actually good and they just don't have that big of a sales force. And yes, the product is actually good, so it sells itself a little bit more than what you have to sell with these steak dinners that Alex Karp talks about. The less stock-based compensation you have, the less overall expenses you have, the better chance Palantir can do some more financial engineering to get GAAP profitability. Why this is also important is because if you become GAAP profitable, those shares that you gave to employees via stock-based compensation actually have a chance to appreciate. Again, Wall Street is not going to respect this company unless they're able to become profitable. That's when hedge funds, institutions will actually care about buying the stock. In order to do that, you've got to get to GAAP profitability. In order to get to GAAP profitability, you've got to reduce expenses like stock-based compensation. Those employees that were heavily compensated in stock will not see the appreciation of that if we don't get profitable, which means ultimately stock-based compensation is the key to getting there. If we can reduce another 30% this year, I think it's going to play very heavily in Palantir's favor to end the year GAAP profitable. Now, the fourth thing I care about to see in Palantir's Q1 2023 earnings is customer growth. Last quarter, they added 30 net new clients, and they closed 55 deals, 5 of which were at least $1 million, 11 of which were at least $5 million. I am very curious to see how many new customers can they get. We saw FoundryCon that happened 2 times, once I believe in October and then once around February, where you had all these different clients. You had Tampa Bay General Hospital, you had Cardinal Health, and they got on stage and they just started talking about the benefits of using Palantir. I actually know someone who talked to one of the people at FoundryCon who was representing Tampa Bay General Hospital, and he said, hey, why didn't you use alternatives to Palantir? And the guy looked at him dead in the face and said, there were no alternatives. These are the types of clients. I know they're not scaling at thousands and thousands and thousands of clients a quarter like other SaaS businesses, but they're getting clients that are using their software because there really is no other software like it, which is the tech moat of Palantir. And at the end of the day, if you're investing in Palantir, you're hopefully investing in a technology that one day can get to that level of scale. Now, in terms of the types of deals, I also want to see us getting smaller deals. One of the arguments against Palantir is that they're only for the Fortune 500. They're only for larger enterprises. But they showed last quarter that when you get a deal that's only worth $1 million, that's in the small to medium-sized business realm. And so if you can get more of those smaller deals, you're showing the scalability of the product. They already introduced pay-as-you-go about 2 quarters ago in summer of 2022. So businesses do have the ability to utilize the software and not pay upfront. The question is, how many deals can they close because of this? The other thing I want to see from customer growth is if the partnerships we have with the 3 big dogs, AWS, Microsoft Azure, and Google GCP, are actually working. We have publicly acknowledged that we are partnering with these companies. Companies that buy GCP, AWS, or Azure are buying cloud compute storage. They're not buying what Palantir is offering, which is why Foundry is layer agnostic. It can integrate with any of your cloud providers, and as a result of integrating with any of those providers, it's as simple as someone on Microsoft Azure opens up the Azure App Store, they press download on Palantir Foundry, and boom, you have the ability to purchase the software and use it on your existing apps. Are these third-party partnerships actually leading to an increase in customer adaptation, or people at least seeing, the app icon of Palantir Foundry in their Azure or Amazon Marketplace and saying, hey, I should call these guys and see what they can do for my business. I've discovered them through this partnership I have with Amazon, Google, and Microsoft. Maybe there's an opportunity here. So for customer growth, if we can see more than 30 net new customers, if we can see more than 55 deals of averaging between 5 million to 1 million more small to medium-sized businesses, and if we can get some clarity on the third-party partnerships we've created, we also partnered with Accenture about a year ago on how that's driving more customer growth, or at least customer discovery, then that would be really important for clientele growth for Q1 2023. If Palantir is able to show they've really made strides in Q1 of 2023 of increasing their clientele, I'd be wetter than this guy. The fifth and final thing I care about on Palantir's Q1 2023 earnings is demand for AIP. AIP was the new platform Palantir introduced, and it's basically like ChatGPT for the enterprise, but secure LLMs that are actually trained on data that puts privacy and ethics of AI in terms of the implementation of the infrastructure of AI at the center of the technology. Now, the question becomes, how much demand is Palantir seeing? Palantir introduced this about a month ago, and it was really interesting. They then introduced the defense version of it, the military version of it. Even Elon Musk ended up responding to that on Twitter because of how unique and exciting the product was. The question is it really marketable? Is it sellable? Are you seeing it grow in interest? I don't expect them to have any revenue numbers from AIP, especially because it's still in the beta stages, but I do expect some analysts to ask the questions around what is demand like? Why do you think this product is so fundamentally differentiated from the rest of the products that are going to come on the market? And where do you see the product roadmap over the next 10 years? Now, Palantir and Alex Karp have laid out this entire vision for us over the past month as Karp has been doing interviews. But on our earnings call, maybe we can get a little bit more of the financial implications attached to this. Alex Karp has said publicly the companies that secure the data and train their models on the secure data and then can implement it within the enterprise or government are going to be the companies that succeed in the next 5-10 years and actually capture most of the market, because not only is training the model hard, but effectively implementing it safely in the business is even harder. A lot of the things I've seen on LinkedIn publicly from Palantir officials and people who represent the company, they're really excited about this AIP, and they think that this AIP can be the next platform that ushers Palantir into a new era, primarily because Palantir was doing a lot of what the AIP has been promising for years, but finally they got the interface of ChatGPT in terms of its UI to figure out how to sell this and make it marketable to the entire industry. I mean, look at me right now. I'm literally in a jungle, right? Like Jurassic Park. AI is the wild, wild west. We don't know who the winners are going to be, but if Palantir and Alex Karp can give us an inkling, a better understanding on that earnings call of why they think investors should invest in them because they're going to be the ones that end up winning this game, then that's going to make me more confident as a shareholder if I get some financial projections off of that, and if I can see some early inklings of, hey, the businesses you already have, do they want to implement this? Are you getting new customers coming out to you and saying, we really need this in our business? That'll let me know as a shareholder, this is the right platform to focus on in terms of marketing. And if it can be what we think it can be, then this might be a big game changer for Palantir. So in Q1 2023 earnings, I'm looking for a lot more clarity on the demand for AIP as a platform. That's it for me and my Palantir thoughts and predictions for Q1 2023 earnings. I'll see you on the race to profitability.